Well, welcome to Talking Heads. I'm Chip Franklin, and this is, of course, my good friend, Endy Zemenides. It's good to see you, my friend.
Good to see you, Chip. And it's a great kickoff to Talking Heads with an unbelievable guest, Jim Chanos. Literally one of the smartest guys in the room, who took down the other smartest guys in the room in Enron. One of my favorite Twitter handles, Wall Street Cynic, but he goes by Diogenes, who's a great philosopher, the father of cynicism. And I think we need some cynicism in what you've termed the golden age of fraud, Jim.
Well, and let me just jump in and say that he's also you're a lecturer at the Yale School of Management, and you teach a class on financial fraud. And I can only imagine that is well attended as we move forward. Let's talk, before we get too deep into this, about what shorting really is. Explain us a little bit how that came about and the good and bad of it as it affects the American economy and the world economy.
Short selling, actually, we want to talk about it in the broader sense, has been around as long as there's been commerce. A short sale is basically the promise to deliver goods and service in the future for money up front. So a farmer that sells his crops that will basically be harvested a year from now because he likes the price today is engaged in short selling. An airline that sells you an advanced purchase fare is engaged in short selling. So anybody that thinks they can make a profit over time on that spread is engaged in short selling. And really, it's very much a part of everyday commerce. We just don't think of it that way. In the financial markets, it involves borrowing securities that you think are overpriced and selling them and receiving the cash. And then hopefully buying back those securities at a lower price in the future, thereby locking in your profit. The other large financial scheme that is entirely based on short selling, if you think it through, is the insurance industry. The insurance industry is the largest short selling scheme in all of finance. In effect, you collect premiums up front, you invest them, and you hopefully pay out the claims at some amount less than what you've taken in plus your investment returns.
Unless you're AIG, and then you get bailed out, right?
Yeah, it can go wrong. We had the very first fraud that I was involved with was also an insurance company selling annuities, Baldwin United, the old Baldwin Piano Company. But anyway, so when we talk about short selling, but there's one more important point as it relates to short selling in the financial markets, I do think is really important. And this is the part that people miss when they talk about short selling and the meme stocks or the schadenfreude of short sellers benefiting from others' misery and so on. Short selling is crucial for not only price discovery, but more importantly, ferreting out fraud. Short sellers have an economic incentive to ferret out financial fraud, whereby financial regulators are usually way behind the curve. I've joked that short sellers are the financial detectives in the markets, whereas the regulators and law enforcement are the financial archaeologists.
And you got a special story on that, Jim. I alluded to the Enron case, but I'm sure a lot of our viewers don't even remember that we've had so much fraud since then. But tell us how you uncovered that and what it led to, how that onion got peeled back.
And what year was Enron?
Enron was 2000, 2001. It was sort of after the dot-com era had peaked. And a friend of mine in Texas had alerted me to a Heard on the Street column in the Wall Street Journal Texas edition, back when the Journal had regional editions. And I said, this was before articles were shared on the internet. So I said, in the high-tech parlance of the day, well, please fax it to me. And it was written by a really, really good writer who ended up coming to work for me years later by the name John Weil. And John Weil had pointed out that the energy merchant banks led by Enron, almost all of whom were based in Houston, had asked for and received a fairly liberal accounting treatment from the SEC on mark-to-model accounting, in which they would sell energy derivatives and be able to book the assumed future profits into income right away. as opposed to booking the profits and losses as they occurred. And this is what the annuity companies had done in the 80s. The aforementioned Baldwin United did that. And I knew that in the hands of a dishonest management, you would aggressively do questionable trades and make questionable assumptions and book the profits immediately. So I opened up
It's a Ponzi scheme,
Enron.
right? In essence,
What's that?
it's a Ponzi scheme in essence, right?
Well, it can be. Again, it's actually the way you should do the accounting. You should basically mark to market, mark to model as things happen, but it can be abused if you make the wrong assumptions. And so when I noticed when I started pulling Enron's financial statements, that's when it got interesting. First of all, I noted that a lot of executives had left in 2000. We're now talking fall of 2000. There was a ton of insider selling in the stock. But more importantly, there were these odd disclosures in the footnotes about how offshore partnerships that were headed up by a senior Enron executive were doing business with Enron. And that just set off alarm bells in our shop because, if you have an entity controlled by a senior Enron exec that is then trading with Enron, I mean, the conflict of interest there are just rife. Those turned out to be the infamous, fast style partnerships. The ultimate irony of Enron was the thing that did Enron in was the undisclosed nature of the mechanics of these offshore so-called SPVs, special purpose vehicles. And so post Enron, Sarbanes-Oxley tightened up that loophole, except for one big exemption. They gave financial services an exemption, i.e. the banks. And guess what happened in 06, 07, and 08?
Yep.
Those SPVs were hidden leverage in the banking system. So, did we learn a lesson? Sort of. Was it exploited again? Yeah. And one of the things I teach in my history of financial fraud class is that the financial fraud cycle follows the business and financial cycle with a lag. That is, as an expansion goes on, as a bull market matures, more and more people have their sense of disbelief eroded, and they begin to believe things that are too good to be true. And that's the perfect environment for fraudsters to come in and begin, collecting money from greedy investors. And as sure as shooting, when the cycle turns down, a lot of these frauds will be exposed, and then there is a hue and cry by the public for the authorities to do something. I've always joked that the strongest defense attorney and the harshest prosecutor of any fraud is its stock price. When the stock is going up, nobody cares. Everything's fine. It's not until people start losing money that A, these things are uncovered, and B, the authorities move. I would point out that the Enron fraud and the WorldCom fraud and Tyco and others occurred about a year or two after the .com market blew up.
Yeah.
And we can go back all the way to the 1680s, and I could just give you example after example of how this happens and how the public screams for justice because it can't be their poor acumen or greed that does it. It's got to be the fact that there are criminals in the system. And the fact is, it's both.
So since we're talking about new tax legislation, maybe smaller, build back better, and it would seem reform of the financial system should be part of a build back better. Are there specific fixes, legislative fixes, or tax code fixes that would make the situation better?
Well, so again, to get back to the earlier point, Endy, we're always fighting the last war on a regulatory basis. So after the GFC, we had Dodd-Frank, which really did tighten up things in the regulated banking industry, where we support our banks with deposit insurance. And so the next crisis is I can almost assure you will not be a broad banking crisis. It will be something else. And I have my suspicions, but we won't address those till after they become apparent. I mean, one of the one of the biggest areas that I'm talking to my class about, for example, right now is in the tech area, where one of you is sitting right now, and the aggressive use of company-generated pro forma metrics to tell investors that everything's fine. And I can't tell you how many companies we're looking at right now that are losing, hundreds of millions of dollars every quarter or every year, and are telling their investors that on a pro forma basis they're profitable.
Who is winning right now? Who is losing, and who stands to lose even more and win even more?
Yeah, so wage earners are losing right now, and asset holders are winning. To make it easy, we have had basically and I'm not that central bank guy, but it's hard not to notice that central banks have really erred repeatedly on the side of asset holders to the detriment of wage earners for years now. It's been
Hey,
going
Jim,
on.
peel that back and explain what that means. What you just said, will you?
Okay, so very simply, the central banks have really erred on the side every time there was a problem at bailing out financial markets and not keeping the currency, first and foremost. Keep in mind, for the last 10 years, the federal bank and the ECB and the other central banks have actively been pursuing inflation. But we've now added a third mandate to the Fed since 1946, which is asset price support. So what do I mean by this? I'll give you a good example. In the fourth quarter of 2018, well before the pandemic, the credit markets tightened up a little bit. The stock market, which had been on a tear, stumbled, and by December was down 20%. And people were screaming for the Fed to do something. The Fed had been tightening slowly at that point. The Fed reversed course abruptly because of the asset markets and began aggressive easing. And people forget this. This happened now a year before the pandemic, when they really opened up the floodgates, as they should have at that point. But the policy error was at Christmas of 2018, when they stopped from tightening as they should have. They should have kept going. Instead, they reversed course, and they sent a message to the markets: don't worry, we've got your back. There was no GDP hiccup. And so these things go in long cycles, in my opinion. And the question is, are we getting, when rates got to 0% and the stock market went parabolic, and we now are beginning to see inflation, incipient inflation, come back, are we at one of those major turning points where maybe labor is going to get a fair shake going forward? I personally, I hope so. Rates should be at 4% without an argument from anybody, based just on where inflation expectations are, and they're at 2%. And so you still have central banks that are basically behind the curve in fighting this, which tells me that if we get into a recession because we have to raise rates from 2 to 3%, we are in a world of hurt. We are in an economy that's a real mess if this economy cannot take 3% interest rates. And so that's the conundrum, and that's the argument on Wall Street right now: is are we headed for accelerating inflation where it's not going to come back down to 2, but it's going to settle in at 4 or 5, or are 2.5%, 3% interest rates going to put us into a Great Depression? I mean, it seems to be not a good situation in either case that we've kind of gotten here, and I think we've kind of gotten here because we've been so easy for the last 10 years.
There was a Wall Street Journal NBC poll that showed more Americans blame high gas prices on Biden than on Russia. Address our illiteracy on that point, or our partisan look on these economic news.
Well, I got news for you. You can blame Wall Street more than you can blame either Russia or Biden. So the U.S. energy area is an area we know pretty well. We've been involved in it now since the fracking boom, and I would urge your viewers to read Bethany McLean's great piece called Saudi America on the U.S. domestic energy industry. And with the volatility in energy prices previously, particularly the collapse in 2020 to negative oil prices, Wall Street sent a message to all the heavily leveraged drillers in the U.S. To basically stop drilling and return any extra cash flow to shareholders, which they have been doing until somewhat recently. And so if you watch the rig count, the domestic rig count, which is published every week, that has turned up now about 2-3 months ago. And shockingly, anytime oil prices really go up a lot, you know what? People ultimately realize they can make more money drilling than returning the money to shareholders. So they're going to start drilling, and that's going to happen. And if you actually look out at the futures curve, which is something most people don't understand, the futures prices for oil are way below where the current spot prices are, which means that the market believes at least that this is somewhat temporary.
What do you expect the short term? The president said he's going to release millions of barrels of oil from the Strategic Petroleum Reserve. Any short term effect on the gas pump for us?
If I knew that, I wouldn't be talking to you guys. I'd be trying my screen.
Kids in your financial fraud class, what kind of questions are they asking?
Well, first of all, I have 4 children who are also 33 to 26. So my own children are that, and so I guess by your definition, I'm a bit of an optimist, or should be. But as we also say in my household, a lot of the policies we've been pursuing for the last 40 years in our country, it can be summed up in the great phrase, "I got mine, how you doing?" And a bit of shared sacrifice for the wealthiest country in the world has kind of really become a debate as opposed to a given. And I mean, just look at our healthcare system, which is an area we follow pretty closely. It is an absolute viper's nest of rent seeking and whatever, and just doesn't have to be that way. Every other industrialized nation provides basically a basic package of benefits for its citizens as part of the tax base. And we just cannot do that. We cannot. We are so wedded to the idea that the private enterprise in all aspects trumps everything, that we are blind to the rent-seeking corruption and fraud that occurs. And if we had cops on the beat that monitored these things, I would have no problem with it. But we don't. We have a compromised regulatory system. We have compromised regulatory capture. We have basically round trip between regulation and private sector. And so all of these things get back to our earlier conversation offline about Adam Smith and how capitalism can be corrupted. There's nothing wrong with capitalism. I love capitalism. It's the crony capitalism that we see in large swaths of our economy that bother me. And I think that's the real issue. And hopefully your kids and my kids, that generation, will understand at some point, whether they're a liberal or a conservative, if they get free market capitalism back to what it really is, with referees on the field, it's a tremendous generator of economic growth.
We have supposedly more transparency than ever. We have more access to information than ever. And it seems like we need cynics more than ever. You talked about a trend line. It looks like it's going to get worse before it gets better. When do we hit bottom? When do we hit a point where we're going to bounce back from?
Well, history tells us. I mean, so every economic cycle with a massive fraud cycle with it, it gives the public kind of a crossroads. And one of the things I teach in my class is that, at least in the U.S. Economic history, the public has gone one of two ways. They've generally either shrugged and said, what are you going to do about it? Everybody's a crook. Or they've gone completely the other way and said, throw the guys in jail. Let's re-regulate. Let's do the right thing. If you look in the global financial crisis, they basically shrugged. And part of it could be because a lot of people that bought houses to reference The Big Short, were also lying about things. You go back to the 30s, however, and we saw with FDR's election in 1932 massive changes. We saw the securities laws that we have today. We saw Glass-Steagall. We saw the Pecora hearings. I mean, we saw a real overhaul of our system.
Was that because of the public, or was that because we had a leader who just stepped out? Was it because
it was the public?
Okay.
It was the public, because the Pecora hearing, I'll tell you why. A lot of the hearings that led to the first 100 days actually started before the election of 1932. They started in the fall and summer of 1932. Because remember, the economy hit bottom in April of 32.
Yeah.
So it really was the public that i.e. elected FDR, number one, but also had got things in motion to their congressmen and senators, like, this can't go on. And so, again, 1870s, we had the Enron of the railroad era, the Credit Mobilier, which was the Union Pacific scandal. They caught scores of congressmen and the sitting vice president taking bribes, and the public did nothing. But then you had the depression of the 1890s, and that brought in Teddy Roosevelt and the trust busters, who did lots of things. So it's interesting how the public looks at these things and decides, it's enough, or well, what are you going to do? Everybody's a crook. I can't do anything about it.
You're giving me some reason for hope, because I think that today's pejorative use of cynic is like, hey, there's nothing we can do about it. And you're saying, and history has shown us, yes, we can do something about that. And in an election year, people should be thinking about it. It's not only what you think you're fighting about. You can change the economic order.
I think that, when we look back on this generation, and even through our history, we have these famous axioms: give me liberty or give me death, or whether it's Jefferson's Declaration of Independence. I think that we're going to look back, and maybe James Carville had it all together when he said, it's the economy, stupid. If you want to get people's attention, you want to get their hearts, you find a way either to, you look at the newscasts tonight, they all end with soft stories trying to get people. I think they realize that on one side, it bleeds, it leads. But if you really want to get people's hearts, I don't know. I look at like herding, try to herd cats and see what you get, but put a plate of milk down, they'll all come to you. It seems to me that there's got to be a better way, to do this. And it doesn't mean we have to reinvent the wheel. It doesn't mean we have to go crypto, but an easier way for people to understand and to wrap their heads around. And maybe leaders that understood it would be nice too,
But speaking of reinventing the wheel, and I think we got you for maybe one more question. I want to look forward. You talked about shorting China. That's going to be, everybody's paying attention to Russia, but the book on the 21st century is going to be about China. There may be a couple chapters on Russia. I think we've learned something with the economic pressure we're putting on, and the economic sanctions, and the way the world has come together on Russia. And also because you've been very active in shorting companies like Tesla and some crypto companies. What do you think the Russia crisis is going to do to battery power, electric cars, to crypto? Give us a look at how this interesting time is going to change us over the next 5-10 years.
Yeah, so I'll set aside crypto for a second. I think that what the Russian crisis is underscoring is just going to accelerate what was already happening. So keep in mind that almost every major car manufacturer, a year or two ago, Endy, basically said we're taking our entire fleet between 2025, which is not that far away, and 2030, we're going to electrify it. And so it's Tesla was, to their credit, way ahead of the curve on this. I still think the stock is crazy, by the way, but to their credit, they were the leader and they got out in front. But now every single major player is going to electrify their fleet. So we're going to see ultimately a cut in oil demand, maybe not natural gas demand, but oil demand. has to happen over the next 7 years, which is not good if you're in the Middle East or if you're in Russia. Another thing that may have been emboldening Putin to move sooner rather than later. Keep in mind that oil prices crashing in the mid 80s was one of the big reasons that the Soviet Union failed. Yeah. Everybody forgets that. Russia is Spain with nuclear weapons. Russia's economy is tiny. It's not a player in the global economy. It exports nothing that people want other than commodities, and never has. No one's buying Russian cars, Russian chips, Russian machine tools.
Can I ask you why? Is there a simple reason why Russia just can't get it together 100 years now? And is it the politics of it? Is it
they've kind of never had a chance. They've been under autocracy for all but a few years in the 90s, and in the 90s they basically stole everything. The oligarchs stole whatever productive capability there was. China will be our competitor, both economically, geopolitically, militarily, and China kind of softly siding with Russia in this invasion is quite concerning, because it does raise this issue now of power blocks, whereas before it was sort of bipolar or multipolar, and now you seem to be getting like the axis of evil again, and that means that defense budgets are going to go up. That means that priorities are going to change a little bit, and the international globalization of supply chains is probably going to continue to be under pressure as countries try to bring home things like semiconductor chips. Man. I would note that Intel is going to be building huge fabs in the United States for the first time as we try. So
you think the decoupling is being accelerated?
Absolutely. The largest source of do you guys know where the largest source of chips in the world is?
Taiwan.
I guess China.
Taiwan. And then second is Korea. Third is Japan. And so, all within striking distance of who. And so, and that's the oil. Chips are the oil of the 21st century. And so I think that all of these things now, the Russian invasion of a large sovereign nation in Europe is bringing into sort of focus geopolitical issues that we're ignoring for years. The same as in Russia. We don't understand why they don't see what they're doing is horrible and war crimes. And the fact of the matter is just that they're most of them, 80 to 90%, are subsisting on a diet of state TV that is telling them exactly the opposite of what's happening.
And to your point about autocracy, right? Axios actually had a great point today. People who live in democracy live longer, enjoy better prospects. But autocracy, they just get state-run media. And, go to your Germany and Japan reference, Chip, it wasn't only the Marshall Plan. It was U.S. governance. There were U.S. governors there. Those two countries were demilitarized. China's not giving that up. Russia's not giving that up. Turkey's not giving that up. Iran's not giving that up. This is really, there's a lot of shades of gray, but I think Jim put the context right. The world right now is in autocracy, the rule of gun versus democracy, the rule of law.
We're way over our time, but can we get you back at some point and talk about China? I'd love to do a whole show just on China. I think that would be.
I'd love to, guys.
And I want to show about the Green Bay Pack before the NBA Finals. I want you to tell us to bet on the Greek Freak in your hometown.
Oh, yeah, you're a Milwaukee boy, aren't
you? I'm a Milwaukee boy talking to a Chicago dude. And first of all, I want you to get all your fellow Greeks to pay up all the Chicago Bear Packer bets that they owe.
That's right.
I think there's about 8 or 10 dinners that the Greek mafia owes me in Chicago. And then we'll talk about the NBA.
You got it. We're going to do a meme with Jim Chanos. Aaron Rodgers scored a touchdown in Soldier Field last year, telling Bears fans, I own you. And I think Jim Chanos owns them. But he made a great case, both domestically and internationally, for a new world order.
But as a coastal elite person, let me just say, when I first started doing stand-up, one of my first jokes was, you know what's wrong with the Midwest? It's in the way. So there's for you too. Anyway,
and you know what we call you guys? You guys are coasties.
Yeah, I know. We know.
So
we got better food.
We understand. We understand.
Hey, great to meet you. Thank you so much for being with us, and we really appreciate
it. This was really great, guys. I enjoyed it anytime.
Okay, thank you very much. Again, that is Jim Chanos, a lecturer in finance at Beckton Fellow at the Yale School of Management, and he teaches financial fraud to young people, and that's got to be that's a worthy thing. You'd like to hear and see more of that. Great guy to talk to. We ran out of time for some of our features, but we'll get those next time on Talking Heads too. But what about, before we go, I want to talk to you about this whole thing with the burner phones and Trump. And the fact that Bolton said, oh, yeah, he used to talk about them all the time. And the fact that there's a 7.5 hour gap when obviously Trump was using a burner phone to talk to who? I mean, obviously, on the other end of that, we're going to, like, if we go in and we look at Meadows, text and numbers, was he texting to a burner phone?
Well, listen, let's not forget Watergate, the lost hours.
Rosemary Woods.
Yeah. And
17.5 minutes.
And this is where there's got to be more outrage. Just with what we have, we had the wife of a Supreme Court justice. Or when we're talking about rule of gun versus rule of law, what was one side trying? It was rule of violence. When we talk about fascism, and I don't like hyperbole, I don't like using terms ahistorically. But fascism is about political violence. That's what we saw about January 6th.
Right.
These hearings should be prime time. The information should be released, because I don't care where you stand on the spectrum. But if there is no accountability on this, if we go towards, we just did a whole show about the difference between autocracy and democracy. Right? If we let the rule of law be undercut, and unfortunately, I think Clarence Thomas is an example, and Ginny Thomas, of the undercutting of the rule of law.
They're just not bright people either, Endy. I'm pretty sure that Thomas writes his opinions on the back of a cereal box.
Whatever he does, we're accepting it, though, Chip. And I think this is the stuff that left me very hopeful with what Jim said, that it's the people. It's the people that led to the New Deal. It's the people that led to accountability after the Great Depression. But it's the people who are accepting this. And as the saying goes, in a democracy, the people get exactly the leadership that they deserve.
On that note, great stuff. Good to see you, my friend.
Good to see you. See you next week.
All right, we'll see you on the next edition of Talking Heads. That's Endy Zemenides. I'm Chip Franklin. Stay well.